Alright, so I'm just gonna go ahead and re-record this real quick, just because I kind of started getting really ranty when I was going through these tweets, but I'm just gonna be doing another price action study, and we'll be going over some of the tweets. I'm just gonna really highlight on some of the key details or key things that he pointed out today in the tweets. So I'm gonna also go point out what I don't understand. Alright, so here we go. Very important. 10 a.m. job openings data will be used for the price fluctuation today. We'll see what that looks like here in just a minute. Wednesday, FOMC in the PM session. Thursday, employment data. NFP Friday. How nimble are you? All right, and then here we go. It's very important. In my opinion, most, if not all, students who come to me over my time as an educator on price action make the same mistake. They try to put every concept I teach into their model, and this is not what you're taught to do. You're taught to learn how to read price, then trade one premium discount array. If your model is not obvious in current price action, sit still. Do nothing but tape read. Learning to wait for your model to present is a major learning milestone. Most fail at the stage and rush in and force a setup out of chaos. This is not taught by me or promoted. Every major league sports athlete can name. It's not performed daily. They're not in competition daily. They are, however, training daily to stay on their best performance curve. Take your trades when the spotlight is on your model, not when the seats are empty. Mwah. Great stuff. In short, my students only fail when they try to do more than I taught or something I told them to avoid. There's no other excuse or reason. Look at the market right now. Do you honestly feel confident you can determine the next draw on price? Nope. I don't see it yet. I'm not embarrassed to say this publicly. Why would you place more stress yourself knowing this way? No, it's not. Whatever. Rule of engagement. If you can't determine the mark in the room, you are the mark. If you can't determine the next liquidity, you will be the liquidity cleared next. Trade accordingly. Alright, he mentioned these two levels. Okay, let's just go to the 60-minute because he said hint 60-minute. Alright, I don't understand. I'm going to be honest. So, he pointed out these levels. Okay, now what's interesting about these levels specifically, and I wish I understood, but I don't know if this is maybe in relation to his new week opening gap concepts. You know, this is Friday. I don't really necessarily know, but anyways, yeah, not to guess or anything. I just don't understand this. But this taps it here, doesn't trade into it, and then after that we trade through it. But this isn't necessarily like it is a fair value gap, but this doesn't just make sense to me. I don't understand why these levels that he pointed out on his Twitter are relevant. He says, he follows up with what I'm thinking. I know what you're thinking. I know. Well, I'm not thinking anything ICT because I do not understand what levels you're referencing, but I'm still showing up regardless, okay? This is how you practice. Then he shows the setup. Something I was actually looking at as well. We'll just get down to the 15-minute, okay? Well, no, I don't know if it'll show. Let's just go to 5. Okay. So I had this level of sell side liquidity. Let's just go straight down to 1 minute, just for a second. Okay. So being that if I would have had the idea that we were looking to short, which I don't currently, I haven't had that idea. Okay, we had this level of sell side liquidity violated. All right, and then this fair value gap here is retraded. This is what he told us to outline, which is interesting because to the top here it hits it. I just don't understand why this is relevant, but you get multiple opportunities to short, or I'm guessing that's what he's showing right here with this. Okay, we have these multiple opportunities here, and then price with that massive displacement all day. Now I'll go through my notes here in a second and explain why I wouldn't have done that, but children require daddy's attention. Be safe. Okay, daddy. Works with my son. What did I use for this? Good question. I really don't understand, unless he's talking about no, there's literally no fair value gap like with that. Not one that makes sense. Okay, just keep going on. Review video this afternoon. He does have a review video. I have yet to watch it. What is the seasonal tendency I told you about? Good question. Let's see. Don't remember. Seasonal tendency. We're here in spring. Let's see. There is a May sell-off and it's bearish. With respect to the point of liquidity void taken in the first weeks and move below the weekly fair value gap. Let's see. Risk off. Bears didn't waste any time kicking things off. Even with that double bottom in dollar. Okay, so May, June tends to be bearish months, which could suggest lower prices ahead. I'm just going to go ahead and retweet that, okay, just so I understand. Alright, so May and June tend to be bearish months. May and June tend to be bearish months. Okay, so that's, I guess, what he's referring to. Alright, so the 90 handles in N cube between two executions being NFP and FOMC removes any need for me. Have your trading done by Wednesday, New York session. Start on NFP payroll weeks if you are new. Have your trading done by Wednesday, New York session. Start on NFP if you're new. So he's pretty much saying have your trading done by Wednesday on NFP if you're new. I am, so that applies to me. Okay, so without further ado, I really dumbed down the notes today because I actually decided, you know what, hey, why am I being so lazy? Let me just get this like study journal and do it. So alright, the very first thing we're going to do here, let's go down to the daily time frame. Okay, or go up, I guess. So I wanted to make a comparison on the three pairs, and I asked myself, where are the three main pairs headed on the daily? Alright, so with everything in mind from the Twitter, this was noted before I saw anything on the Twitter, okay? So that way not to change or, I would not take influence by that and I could potentially learn something. So to just break this down real quick, as we're not really going to visit this more than outside of, the daily for now. But we have this level of buy side liquidity, this previous high here. I outlined that in my notes. Okay, and then I put price is bullish and hasn't shown any reason against that. Now, when we talk in terms of where's the next liquidity grab, it doesn't really make sense for it to be back here, and even if it was, I can't really see any of that data. So, yeah, But at the same time, we have this, which, as we know, something like this is large inefficiency. It's likely to be repainted. On top of that, we are on May 2nd with the seasonal tendency that ICT just talked about. We're seeing bearish movement, and we see that continue lower. Okay, so we have that fair value gap here. I outlined that. All right, here we see a different story, and the reason why is with this level of buy side taken here. When we look on here, we have these highs, but that buy side liquidity has yet to be taken. So the question we have to ask: what would I need to see for me to say, hey, I'm going to go in and I'm going to be a seller? Well, first I'm going to want to see a trade below this low. Okay, we had this low here, which was traded below, but my explanation behind that, or what I believe is happening here currently, is that it's trading to this inefficient fair value gap right here. Okay, so this doesn't really stand out to me that much with my current understanding, and I would say displacement below is my criteria to rethink bias here. All right, but anyways, what we have here, we have a high. Okay, we have a failure to take out this high. So these, okay, and bear in mind, I'm still learning this. So this might not be right. These now become, long-term highs. Okay, these become long-term highs, and then this becomes like an intermediate term high. Fails to take out these highs. Now, I need to go back through episode 12, and I just went through episode 11 again today. I realized my understanding really isn't that great, and I didn't fully understand everything in episode 11, and I didn't either the first time I went through it. A few key points that I just took were pretty much him talking about like intermediate and short-term highs, and I'm going to have to watch episode 12 because even though I replayed it over and over, I don't understand exactly what he's explaining. He's talking about how, you have like a swing low, another swing low after, it's like a lower low, and then, you see like, honestly, it's hard for me to even explain it because I don't understand it right, so I'm just going to leave it at that. Yeah, I don't really know. Anyways, the main point I wanted to make is just that we didn't take out this high. Now I said I wanted to keep this short, so let me just continue. Very simple here. Same thing. We still have this buy side liquidity here. So on two of these, buy side liquidity is yet to be taken. This shows buy side liquidity taken. Okay. Boom. What is US dollar doing? Okay. Right now we are obviously seeing lower price on the US dollar, but where we're at, it leads me to be uncertain. Not that I analyze the US dollar or anything, but I just wonder, like, where could liquidity be going to next? You know, well, like where's going to be the next draw on liquidity? And it looks like we're moving from dollar, from up here down here. So looks like we're moving to some kind of discount. Not entirely sure there, but I didn't really take time to look at this. Just mainly these three pairs. So we're gonna go to the main pair that I want to study here. And today was my observation was today was a rebalance of a prior fair value gap or bear day. Okay. So this being the fair value gap I'm mentioning, rebalancing. Okay. And price is likely to stay bearish, and the volume of the body will trade the imbalance. So we'll trade down here. Now, the reason I said price likely to stay bearish, that was my opinion before, I heard what ICT was saying about, seasonal tendencies, or I guess people's perception of what he taught. Okay. Yeah, I mean, I'm still going to stick with that until my criteria is met, because it wouldn't make sense for me to trade anything that I wasn't confident in, so anyways. 15-minute levels. Let's go to 15-minute. Okay. Looking at key levels here. Midnight opening price. We had this sell side liquidity. Slows taken out. Displacement. Is it retraded? We'll look at that a little later, but is there a setup here? Nope. Okay, PM, is this high probability? Let's go ahead and look back here what ICT was saying here. Review. Yeah, what's he saying here? Boom. Roll engagement. If you can't determine the mark in the room, you are the mark. If you can't determine the next liquidity, you will be the liquidity cleared. And yeah, to me, like with what I said in my notes, my bias is bullish. That was my true bias. Nobody influenced me on that. I came to that conclusion myself. I'm still looking for higher prices until I'm shown a reason otherwise. And with that being said, even just this day, it's just rebalancing inefficiency. My mind hasn't changed on that. But regardless, this is. I wouldn't have chased this move. I couldn't have known that it's going to go this low while it was forming, and I'm not, ashamed about it, okay? We have this. We start rallying during lunch, okay? And then price shows a willingness to revisit these inefficient pieces of delivery, okay? So, that's pretty much it. Explosive displacement to fair value gap, rallies at lunch, closes off. Mark those key levels from 8:30. This right here. This is what I was talking about. Okay. So let's go into the 5-minute. 5-minute, we're going to see the same thing. All we see is refined displacement in the AM low. Okay. And then we just had low probability price action in the PM. Nothing I'd want to be trading right here. Okay. All right. 3 minutes. Let's see. Do we have anything here? Nope. Nothing. No good. When we look here at this potential setup, sell side liquidity, yes, we have displacement, but no low. Okay, so it retraded. Well, it's retraded to these levels that he mentioned, but these levels would not have been on my chart had I not gone to the Twitter and drawn them out on my chart. So I don't necessarily know the relevance of these levels still, but I have them marked down here. And apart from that, there's nothing here. Nothing here worth trading. So the last thing we can do is go down to this 1 minute here. Fudge. Alright. Trying to relax, bro. What the hell? Been so fucking busy. Alright, goddamn. I'm gonna wrap this up because I'm getting restless. Or not restless, the opposite. I'm getting fucking exhausted. Alright, listen, we have this level of sell side liquidity, massive displacement, retrades that displacement, kind of respects this level, just kind of almost acts as resistance, Okay, and then just continues lower. Boom. Okay, this doesn't make sense. This was something I was looking at, but we were moving into a discount, and there's no reason for me to be looking for sell opportunities. I want to have Chase's move. Yes, it's going lower. Don't really care, to be honest. And this is obviously a contrarian idea, as this isn't a buy opportunity. With my current bias, which I'm sticking with until I have a reason against it. So trading with my bias, looking for low resistance liquidity runs. Do we have that here? Sorry. Does this look like a low resistance liquidity run? No, it doesn't to me. So I'm gonna wrap it off there, and that's pretty much everything. Yeah, peace, bro.